Hi, I'm Keith McCullough. Welcome back. Today I want to give you a market update. I wanted to give you a market update in the context of how we look at the market, which is, of course, across markets. So we're looking at currencies, commodities, stocks, and bonds. And the first thing I just wanted to call out plainly is that the bond market is absolutely nailing it. So if you look at what the bond market's doing from a year-to-date perspective, the upside down, of course, to that point is the 10-year bond yield. The 10-year bond yield is down 15%. 15% for the year to date. And this is with all of Wall Street, or as who we affectionately call Old Wall Street, bullish on bond yields and bearish on bonds. Come on. The other thing that they're bullish on, of course, is U.S. growth, which we had none of in the first quarter. And no, it wasn't just the weather. They had weather in Canada. They had it in the U.K. In Canada and the U.K., they actually had growth. In our country, we had 0.11% growth. Now that's just not good. That's not good if you're a growth investor, that's for sure. But as you know, we don't want you to be long that stuff. We want you to be long things like inflation, which I'll get through in a second. So let's just kind of go to the wood. Unfriending U.S. growth. Unfriending U.S. growth, Keith. Why would you do that to me? U.S. dollar index testing its year-to-date lows, yo. That's bad. You don't want to friend somebody like that. That's terrible. That's awful. And the power currency couple, which by the way is European, up another 0.3 to 0.4% last week in the face of the dollar falling. European stocks continue to do better than growth stocks in the U.S. European stocks were up 1.3% last week, up 3% for the year to date, which stands in stark contrast to something like the Russell 2000 in the U.S., which is down 3% on the year. If you just want to blow this out a bit, MSCI World Index up again last week. It's doing better than the Russell by 500 basis points. And if you want to go to my homeland, oh yeah, we're going to go there. Canada up another 1.6% on the week to up 8.4% for the year to date. Now, what does my homeland have that you really need when inflation's accelerating? They have a lot of that stuff. So again, look at inflation accelerating last week. And again, this is the causal factor in why we think growth is slowing. You give people too much inflation, they have less real growth. But again, food prices. Yes, food prices, for those of you who are still eating out there. Food prices up another 0.7% last week to up a 22.3% gain for the year to date. It's not funny. It's actually not funny. How about that meat? Meat. Bring the meat. Cattle prices. Up 3% last week. Guess what? Meat in this country is at an all-time high. I know all times is a long time, but I mean, come on. People need, stay with me, people. Natural gas. Now again, most of you don't, fire up the barbecue with that stuff in it, hopefully, but at the end of the day, use propane, Canadian note. Natural gas prices up again last week, up 14% year to date. For those of you who live on the eastern seaboard of the U.S., you will notice that is not February weather that is driving natural gas prices higher. So whether it's food, it's cows, it's pigs, it's natural gas, whatever it is, your rent, shelter, I know these crazy things that the Fed wants to back out. Of course, inflation is ripping Americans a new one. That slows growth, and that's why bonds are doing well, that's why growth stocks are not, and that's your market update. If you have any questions, I'm at Keith McCullough. If you have anything for Keith at all, just ping Keith at Keith McCullough. That's my Twitter handle. Thanks.